Hello and welcome to the IPO review. Today we are going to talk about Data Patterns India Limited. Data Patterns IPO will remain open from December 14th to December 16th. The issue price band has been fixed at rupees 555 to 585 a share. Data Patterns IPO comprises a fresh issue of shares worth rupees 240 crores and OFS of 59.52 lakh equity shares. The company is among the few vertically integrated defense and aerospace electronics solution provider catering to the indigenously developed defense product industry. With net profitability growth of approximately 164% between FY20 and FY21, they are one of the fastest growing companies in the defense and aerospace electronics sector in India. To talk on the IPO, joining me now is Mr. Srinivasagopalan Rangarajan, Chairman and Managing Director, Data Patterns India Limited. Welcome, Mr. Rangarajan.
Thank you.
Give us some highlights about the issue, the objective of the issue, the shareholding pattern right now, and what happens after the issue goes through successfully.
Okay, the promoters, that is me, my wife, and a few people hold majority stake sale, about 58-59% presently. I think post-issue it will come to about 44% we'll be holding shares, 44-45% nearly. We have a large shareholding, about 19% by our employees, and then foreignly Matthew Syriac owns a lot percent, and the rest is held by various people. We also have a nearly 3% held by Mankekar family, who came in from Bombay, who came in into the shareholding about 2004, and they remain invested in the company all these years. So that is the kind of shareholding. As regarding the post-issue, the objects of sale is that we're trying to see whether the repayment and prepayment of all the working capital what we have in the books now. We idea to do that, prepayment of the working capital debt, settle it, and also the next 2 years of working capital what we want. That also is going into the objects of issue. The second is that we are already expanding our infrastructure. The expansion is already on. We have started construction right next to our facility. This is to cater to the existing contracts on hand, as well as the future contract expected. So we are building a large infrastructure. We're spending about 85 crores on this, out of which 60 crores is coming from the objects. The rest is on general corporate expenses.
Mr. Rangarajan, why did you reduce the size of the issue? I mean, are you jittery about the current market conditions?
No, we will not reduce the size of issue. What really happened, 60 crores, the 300 crores was the fresh issue, out of which we have done already pre-IPO 60 crores. So that has come down to 240 crores. That is why the issue size is 588 crores. We will not reduce the issue size. What is originally planned, we're continuing with that. Not at all worried.
Tell us something about the business model that you follow, sir, because you are in a space which is very critical, for the country like India.
See, we started life 30 odd years back as a product company. We built products for laboratory instrument automation. We branded the products for companies like Blue Star, Inditron here, competing with PerkinElmer, Hewlett-Packard. So that is how the company started. It's always been a product company. We came into Department of Space building test solutions and test systems. Again, building a product very similar to HP or Hewlett-Packard there, where we built our own language, like HP Basic. We had a DB Basic interpreter language and a very complex platform for automatic testing. We won contracts with that against Wipro and other competition contracts into the Department of Space. That is our entry into space and defense. We built almost, today if you look at the launch vehicle program, whatever 95% of what is flying the launch vehicle, the test system supplied by Data Patterns as a single vendor. We have rate contract with Department of Space. In 2001, we won the contract to do the countdown system testing in Srinivasagopalan. That is also last 20 years is operational. So that life was with, we started with ISRO. And then we want to scale the business. We looked at DRDO. At that time, we were looking at, DRDO was telling us that if you develop some products, let's say for the air, and as long as the number of units, about hundreds of aircrafts are produced, you'll get repeat business continuously for the next 10 years. We thought that's a good way of starting. So we went into business building because we're very good at what we do in terms of building competencies and product. So we need to get the market opportunities, and it's all good, fully indigenously designed. So we went there. And the initial things are very successful. In 2001, we entered into this program. We won the contract for BrahMos missile launch program. We're the first people to do this in India. We were 35-man team that time. And we're competing with companies like L&T, Tata, BEL. And it's actually, when we went to the technical evaluation, we found that we were overcrowded with such large organizations. But again, we had every product with us, which they didn't have. We won the contract, we delivered it. And that company has been, BrahMos has been giving me every 3-4 years some bunch of orders, some 30-40 crores. We still have some contracts now also. We are building more to them. So this is one good thing which happened. But when we went into this LCA program kind of thing, we did the cockpit display. What they told us, hundreds will follow, but that didn't happen because their own program was not actually, getting certified. So we then understood the business is not as rosy as everybody decides, wants it to be. So then what we did is there's ups and downs in the business. So we said, let's go across DRDO, build into so many programs. So in the long run, one program not taking off is not affecting us. So we did that. And in doing that, we built a competitive model, which is very, very good. Second, we also went to the model of what is called as commercial off the shelf, reusable building blocks, competing against international suppliers. This is the first way we started DRDO. With that, we reused it with various other programs, build a customized portion, then build large programs of this. This is how the company started. Over a period of time, we again said, how do I scale? I'm giving you a very long answer, but you're talking 30 years to be compressed. So just give me another minute. I'll probably answer this system properly. So what really happened is we said we have to build the end system. The DRDO are doing parts of the system, whereas the Army, Navy, Air Force is buying full equipment. So to address that, we said, let's build the complete systems. We need to do two capabilities. One was RF and microwave. We today build whatever the world does in RF and microwave, we also do this. So when we say differentiate, vertically integrated, we are the only company in India who do across the spectrum electronics. Second area, what we want to do is full systems, where the domain has to be done, the application knowledge has to be there. So this we've got done with the radars, electronic warfare, communications. We probably build the only company in India building complete equipment. What's really happening is, the model is this. We build full systems and equipment. Now the model is, the markets are opened out to Indian defense vendors. Market is large. We need to have products to address the market. So that is the model which we're doing, where 100% design is done in India.
Tell us about the order book size that the company has right now, and what is the kind of growth that you see for orders from India? And are you looking for export markets too?
Okay. Now we have about 600 crores of orders at hand. It's nearly 2 years of 2.5 years of order book we have. Okay. If you look at that order, the important thing is 70% of the order is in production contracts. 20% is in development contracts, and about 10% to 12% is in service contracts. Now, we need to talk a bit about this. Our model, how it is, like I told BrahMos, we start with DRDO, build the product on development. Once DRDO completes its end system and then, qualifies it, they transfer technologies to PSU. And the PSU then gets a nominated order from Army, Navy, Air Force, like BE or HAL. Then we are the OE. So back to back, we get an order. We call it the production contract. It may take 3 years, it may take 7 years. In LCA, it takes more than 10 years. Something happens, but not all of them as elongated as LCA. But anyway, so this is what the model is. So what we are today doing is we started getting so many programs we've done in the last 7-8 years. A small part has now started giving us production contracts, which gives you visibility for 2-3 years. That is the 70% I'm talking about. We also did one more thing that we competed in MOD tender in 2014, where we built the entire radar ourselves and then won a contract for 254 crores a couple of years back. That is under execution. That is why we are investing in infrastructure. We still have 20 crore, 100 crores of development contract, which we believe once you build the product, then 2-3 years down the line, we'll get many thousands of crores of repeat contracts. So today, that is the model, what you're doing in terms, and we're looking at a model where, if you look at large corporates in the world, they have aftermarket sales of 40 to 60% of the overall book on 5 years. But whereas our aftermarket is 10%, that means what? Only a little bit has gone to the services. So we are in a nascent form. Though we have a 30-year development capability, we're actually in a nascent industry today. Industry is really starting up. So the growth is going to be extensive. This is point one on the orders at hand. Then again, second, what is that? The contract didn't so many products we've done, and then we have a pipeline. The pipeline is several times the contracts on hand today. Okay. Several times. Let me give you examples. Radar warning receiver. We've done the very modern, digitally open radar warning receiver with DRDO. There is no flight tested with LCA. It's going on. Requirement is 80 plus 100 plus. Each is about 4-5 crores. And then this is also going to be flight tested Sukhoi 30. The requirement is 270 plus for 1,500 crores. So I'm talking one. Similarly, in EW, we have Himshakti. We have, planes and deserts. We have Elint Airborne. We have airborne radar for NUH, for the naval upgrades. All of them we have delivered. So repeat order is expected. We have a bunch of that contracts. So I think, from what we've done, we are at actually a stage where we just about to take off. We are at an inflection point today. And more importantly than what we have and what we've done, the Indian market has opened up, which is huge. So if you're able to address and build products to address the market, the opportunities are very, very large.
So what is the kind of contribution that you expect from the export market in coming time?
Today we are exporting a limited amount to UK and South Korea. Here again, the export what we did last year is about 12% of our turnover was exported, about 10 to 12%. We continue to do that. We had this is a product which is designed by us for avionics for a very modern radar to UK, which is being sold all over the world, not India as yet. And now they're very happy. This month is the 100th equipment we're shipping to them. Based on which you asked about 3 more designs which you've done, which also is very happy. It may even go to Predator and airborne systems for US. So our product, what we're doing now, we've got 200 systems going to be ordered in the next quarter, about 140, 150 crores. So we expect to double that kind of turnover. But still, whatever turnover is saying, the market opportunity in India is much, much larger. And so as a percentage, exports is small. What we're planning to do post issue is not just scale that opportunity which we're getting. Plus, second, we want to clone ourselves, put a small division, because we have incredible competency in hardware, software, and engineering. So we want to clone that and see whether we can start marketing our efforts to a service industry model rather than a product industry, which is what we're doing now. We can't do it out, so we want to create another. So in the next 3 years, we have some ambitions to really start serious exports.
Between FY19 and FY21, the company has recorded the highest growth in terms of revenue, 71%. What is expected going forward? I mean, what kind of CAGR do you expect the company to grow in, say, next 5 years?
The next 2 to 2 years, 3 years, we similar or slightly higher CAGR we expect, because this is coming from the contracts on hand, which has to be executed. So this is available with us. And some of the pipeline contracts is happening. About a couple thousand crores of contracts will happen in the next 1.5 years, because some of them already gone to tender, and back to back we should get an order. Some are finalization, negotiation. So back to order is expected. So based on the next 2 3 years, I have visibility to scale this better than what we've been doing today. From last year to this year, we probably scale better. Going ahead, we have some short-term and medium-term plans how to address markets. Some tie-ups with some Swedish company, etc., to see how to build more products here, and also engage ourselves in the MOD tenders is coming up, and also look at the ecosystem which is developing in India. We have a number of other strategies to scale the businesses, and the pipeline is very large. So we're quite confident we'll grow the business the way we want.
Mr. Rangarajan, as you said that Indian markets have opened up for defense space, but we have large number of companies also getting ready to have the pie from this kind of a huge opportunity that lies forward. What are the key strategies that you will be working on and that differentiates you from the existing giants that we have?
See, we have competition at 2 levels. One is the DRDO level, which are smaller companies, and the second is in the MOD level. The MOD level competition is like L&T, Tata, Mahindra, so all of those big companies there. But their model is different. Their model is, we've started from scratch and built up a competency. They will do tie-ups and then address the opportunity in the open market. So our strategy is slightly different. For example, we won the contract for 250 crores from Precision Approach Radar. Everybody tied up with somebody else abroad. But we won the contract based on our own product. We built the product in went. So the advantage is, what we've done with DRDO, a substantial amount of development has been done, and that has been done in building blocks. If I can recreate the building blocks, modified engineering, address it and reposition to MOD requirements for 300, 500, 4,000 crore kind of requirements, my cost model is much lower. Whereas the IP belongs to us, we have done the development, so I have a compressible cost or a selling price, cost is low. Whereas other companies have to buy and integrate, the cost is going to be far higher. So the model is slightly different. Do more in India, create IP in India, then I have a better probability to win. So that is the model which we're doing. On the development model with DRDO, we continue to invest heavily in product development. Matter of fact, in whatever orders we have with DRDO, we write all the development costs in the same year. We don't even charge them development costs. We absorb the development costs, thinking the future is important. So we continue to do that. And we have a number of, now the development has changed. We don't do part of a system, a very small part. A large part of the system is designed by us, but the result is then can go to upgrade programs of MOD. We have a lot of other strategies to see where we can uniquely position ourselves. We are very differentiated from the rest of the companies in the block today. Whatever you take, whether it's L&T, Tata, of course, their competence is also different. The market sizes they're looking at it different. So we don't confuse ourselves with that. I think very differentiated in the area where we want to compete. So I think we will survive well.
Mm-hmm. So data patterns is a perfect example of Atmanirbhar Bharat, right?
Yes. Matter of fact, we have the slogan with us, Made in India with Pride. We've been doing this for the last 25 years, every exhibition. Before Make in India became, common parlance, because of the Prime Minister. See, we just don't make in India, we build the product in India. The IP is made in India. We make made in India. We say we don't make in India. You don't bring something here and engineer system, put it together. So we've been believing in that on what our competencies built. We have enormous engineering talent. It's a question of bringing it under leadership and deliver on the competencies.
Thank you, Mr. Rangarajan, for your time. It was a pleasure speaking with you, and we wish you all the best for your forthcoming IPO.
Thank you, Geeta. Thank you very much.
Investments in securities market are subject to market risks. Read all related documents carefully before investing.